Good morning, everyone. Welcome to the morning brief on Thursday, July 16th. We'll go ahead and talk about the podcast. Some of you know I had the interview with the New Zealand folks. That was pretty fun. I hope to do more of that over time as I build more of a portfolio, if you will, of media appearances. And hopefully, the goal is eventually be on CNBC. So that's where that's kind of going. It was pretty interesting conversation. It's kind of short though, which is nice. About 20 minutes, and very polite questioning, and it was good stuff. As far as the episodes, we're up to 28 episodes now. I released that as an episode. You can either see the YouTube version or the podcast version if you want to listen to that. And 973 on the downloads. Friday is always a big day, so that's tomorrow. So if I don't hit 1,000 today, it'll be tomorrow. So very pleased with that. And then bigger numbers over the weekend. And I'll make a big push this weekend again for the room. So try to get a few more names in here so we can get more friendly banter going, which keeps it more fun. Okay, for our mission objectives, we're going to grow our money, protect our money, and live off our money. Today we're talking about bond funds, which is 100% protect your money. You could say live off a little bit, but it's mostly you're offsetting the risk in the market. And one thing I talked about yesterday was the question was, if the Democrats get elected, wouldn't they be raising taxes at exactly the wrong time? And I said yes, and then kind of expanded on the answer of why that would be the case and how they might not be able to get their tax stuff through right away, or maybe scale into it, that sort of thing. But realistically, with what you should be doing now is going into bonds. So if you look into your accounts, you're seeing SPXB is the bond fund that I use, and primarily, and you have some of that in almost all of your portfolios out there, whether you've noticed it or not. You're going to see more of that, especially as we get closer to the election. And then I'm using a bond fund now instead of individual bonds, so I can turn around and pivot that back to equities in case of either a Trump reelection or the tax package that comes out of the Democratic side isn't as horrendous as many expect, right? So we'll see. But I'm staying a little more nimble by using a bond fund there. That's why I'm doing it. So that's our topic today. The name, academic topic of the day is the bond king himself, Jeffrey Gundlach. We're going to talk to him a little bit. He generally shows up on days like this where there's a bunch of red, and is one of those guys you never hear from him when the market's screaming higher, but he gets some screen time to talk doom and gloom about the market and why you should invest entirely in bonds on occasion. So it's always fun to listen to him, but take what he says with a grain of salt because he is the bond king. So for overall flow today, we'll go long, short, open, short, long, and then we're going to talk about the market review around the world. Big red numbers out of China, so that kind of affected all of the markets, and that's why we're opening up lower today. Talk about the headline review. Remember, this is day 4 of earnings season, so I had a couple big headlines out there associated with that. There's our 6 names we're going to look at for our long-term investing. Those are all bond funds. We'll get into within 10 minutes of the open, we'll switch to day trading. We'll execute that and then go back to the long stuff and question and answer after that. For contingencies, any tech issues, steve@ototnow.com, and standard disclaimer, this is a financial education presentation, so you have to do your own due diligence before you act upon anything you hear this morning. All right, let's go to TD Ameritrade and check out where we are in the market. Again, the big news there is that channel uptrend. It's still there, and again, those are AI generated, so those will drop off once we break out of the channel. But we hit the golden cross a few days ago, and true enough, it's been straight up since then. Yesterday, you see the red candlestick. That meant it was up bigger at the open than it closed, but it still closed up with nice numbers. So let's take a look at the 5-day look of the actual SPY here, and that's what I was talking about as far as the last of the blue stripes there. A lot of kind of motion yesterday, intraday, but we stayed in the green all day long, and then it's kind of a strong finish into the close. And again, I think we would have continued that trend, except for China is off 4.5% last night in their market. Their market basically got hammered. So that is where we are on the 5-day. Let's go over to the calendar. The names that you know, there's a million of them. We have Bank of America pulled up there in yellow for you. They did beat earnings. However, their stock was kind of flopping around afterwards. A lot of the other bank stocks jumped significantly, but Bank of America said they were withholding some incredible amount, like $41 billion they're holding in reserve for defaulting loans. So that, I mean, by that sort of negative, I mean, that's a smart move from a business perspective, of course, but that sort of negativity is concerning, and I think it spooked a lot of people this morning. But so that's Bank of America. Morgan Stanley's another one right there in the middle that you see. And then Netflix, I believe, is after market today. So that's a name a lot of people follow. So expecting big things from there. All right, that's it for the earnings for today. So let's switch over to switch over to CNBC, and thank you. And we will talk about the market. You can refresh that real quick. So you can see there everything, NASDAQ's down over 1%. Other stuff is down 0.75%. Heading over to Europe, primarily in the red due to a hangover, if you will, from the Asian markets. So let's click to Asia there. So there's the big news is China, their GDP grew 3.2%, but they're used to growing up towards 6%. Remember, this is an exploding economy over there, and dropping 4.5%. That's a healthy chunk, if you will. So kind of drug everything else down with it across the board. You take a look and go over to U.S. Those are our numbers from yesterday. 4-day win streak in the Dow. So we're due for a red day anyway. So to have China news that negative, and of course we just got our unemployment numbers, which we've gone a little bit numb to. They were more than expected, over 1 million again. We'll see where today goes. I could see today being a small red day, nothing dramatic unless there's some crazy headline. Over to bonds, small sell-off in bonds. Over to oil. Again, another sell-off there. Oil's still hanging out above 40, so that's good. And over to precious metals, we're red across the board. So kind of an altogether kind of selling based off of the big ugly China number from there. Okay, we'll go back to the main screen and start hitting the headlines. Again, unemployment number is going to be our, it says more than 1 million for 16th straight week. So remember, these are new claims. So there's kind of a math thing here. It doesn't count anybody that's going back to work. So if you were to get new claims for 1 million for 16 weeks, you would think the unemployment number would be increasing. Well, if the other folks that had done that are now coming back off of that, that's where they're different from the unemployment numbers, is my point. Now, a significant date's coming up, and that's July 31st. That's when the extra $600 a week that you get for unemployment during the from the CARES Act, during the stimulus package, first stimulus package, that's set to expire. Now, we have heard a bunch of talk from Pelosi that the Congress is going to stay in session to make sure that we get a second stimulus package passed. And I do think that's going to be the case. And it may include some more unemployment benefits. We shall see. But that's a cliff. I mean, it's basically, think of from personal finance, if you were on that sort of program, which obviously millions are, that's $2,400 a month that's going to not be there anymore. So big deal if something's not done. I think there will probably be something in the middle. Instead of extending that number, I'd imagine maybe half of it or something. We shall see. Okay. Got fantastic retail sales pop, more than expected in June. I think 5% was expected. It was 7.5% or the raw numbers there, which is a pretty big beat by 50%. So people are anxious to get out and put their money into the economy, which is what makes the American economy so strong. Some people think that that's because we're so foolish with our spending, and I'm not going to argue with you very long on that. But good thing people are, because that's what gets people. That's what allows all these businesses to thrive and for stockholders to make money. All right, let's see. Elon Musk, yes, his Twitter account got hacked. I checked it. I didn't see anything particularly entertaining off of the hack. So maybe they took the hacking stuff down. But it was Biden, Obama, and Warren Buffett. Not that much interesting flows through Warren Buffett onto Twitter, but everything except for Trump. I thought that was funny. So I'm shocked we haven't seen a headline that Trump was behind the Twitter hacking, right? Because it seems obvious. Okay, let's look. You know, it's an interesting. I had a conversation yesterday about sure, what do you do when you're in retirement and your big companies you counted on forever, like Ford, cut their dividends. So yeah, it does cause a time to rethink. If you're living off those dividends, you can't stay in a name that isn't paying one, right? Because that's your income. So you do have to shift into more stable dividend names. So it's causing a lot more of the retired class of folks, if you will, of class of investors to really have to get more involved in their portfolios than they probably had been in a while. So, all right, Michelle Obama podcast coming out. I hadn't seen that. Disney, the last of the all 5 parks are open at Disney World. So I think they're on a 25% number, but at least getting things back open and on a trajectory for normality, if you will. All right, we can continue on up. Ooh, I hadn't seen that. JetBlue and American will share passengers. You know, it used to be when you missed your flight, you could go over to basically any other counter and any carrier would take you A to B and they'd work it out behind the scenes. And then all of that, of course, stopped completely after 9/11. So that's interesting. So maybe we would get back to that someday. It seems like all the airlines should work together, but they clearly do not. So interesting. I also saw a big headline out of American for up to 25,000 people to expect to be furloughed. So we shall see. Have some buddies that are kind of right in that window, unfortunately. Yep, Biden 11-point lead. So that's all you're going to see, just like the Hillary, Clinton, and Trump race in 2016. I don't think we'll see anything less than a 10-point lead all the way up and through the election, because that's what the polls are going to show because of the people that particularly take polls, which is a little bit biased towards the Democratic side. So it's going to be a who knows situation, in my opinion. I was off by a number. I'm looking at the Bank of America, 4 billion, not 41 billion. So 4 billion though. They set that aside. So that's a pretty big war chest to just have ready for people defaulting out of loans and things. So we shall see. All right, that is it for the headlines. Let's go on over to the Schwab display and I'll show you the funds I have pulled up. Okay, the first one in the upper left there is the SPXB, which is the fund that I use primarily for if I don't want to go commit to individual bonds, which again, if you commit to individual bonds, that means we're going to hold those to maturity. So that standard 3 to 7 years out. So I don't necessarily want to commit all that capital to bonds. If you're in retirement, I can. And then we'll just accept used to be able to get 5%. Now I'm saying 4% is the best I can get for folks. And you marry a bond when you buy an individual bond. You can date the bond fund, which again, there's a problem there. There's some herd behavior in bond funds, but SPXB is by far the one the best one's out there, in my opinion. So let's take a look at it. You can see before it had basically been creeping up from 82 all the way into, what's that, 94 or so prior to the wheels falling off the market. What was different about COVID-19 and pretty much any other drop in the market is, remember, when markets drop, bonds go up from the money flowing from one to the other. That did not happen. So I had to everybody basically I had in bonds, I had to meet with them and say, this has not happened before in history. Everything sold off. So people were getting out of bonds too and just dumping them. So pretty big hit there, and that was concerning because bonds aren't supposed to take a hit. Well, all of them have the big check mark there, kind of like the equity markets. But when you talk about the healing of the bond market, which is what I call, instead of the stock market, which kind of snap back, I mean, these snapped back to a little bit, but then they kind of heal over time, meaning they're continuing to get back up to what the actual bonds are worth. But SPXE in specific, they're mandated they can only have bonds of companies that are in the S&P 500. So with the criteria to get into the S&P 500, like you have to have 4 profitable quarters in a row, which is why Tesla, if they're profitable this quarter, which it certainly seems like they will be, then they will be in the S&P 500. So there's a quality criteria there, which is why I like using this fund. And it's a little more stable than some of the others. So you can see where it is. I've been buying it around 90, and it's up in 93. I think that will go well over 100 before the election, because people are going to safety with their portfolios. And the uglier the headlines, which I think the headlines are going to get ugly, uglier, they're already ugly, right? I think you're going to see a lot of more money flow into bonds just because people don't want to take the ride. You know, one ride a year is enough, and that was a heck of a ride back in March. People are not really up for it. So you're going to again pick best of breed, hold those through the whatever downturn we have out of the market, but for other money, get out of the speculative stuff and go into bonds. Okay, to the right there is G-bill. Well, first of all, SPXB, all of these pay out a monthly dividend. That's why you see all those D's across there. So it accrues daily, pays monthly. So your bank account does that, right? So you can be in SPXB for 4 days and leave it and go to something else, and you get credit for that 4 days of interest later on when it pays the dividend out. So I love the way it's structured. Okay, G-bill, you've seen this name before as well. That's my treasury bill fund that I use primarily. And you see that it basically doesn't move very much. It's pegged at 100 is where it's supposed to sit. But when you look, it's been over 100 for quite some time. And then, of course, it spiked up because it was the only thing that didn't go down pretty much during the whole COVID-19 thing. Even precious metals were dropping. So it's kind of crazy. So treasuries are your safety. These are from 3 months out to 10 years that are in the G-bill fund. That is the only way to really kind of get safe, if you will, if we were to say close the country all over again. So went up to almost $1, right? So it's kind of an insignificant move from a percentage wise. And the pattern you can see off to the left, it's kind of funny to see a stock pattern like that. But yeah, it basically runs up till it pays the dividend, and then it drops down, and then it runs back up again. So that's what it would look like if it were normal. It's still not quite back to normal. As you can see, the chart isn't doing that anymore. But it is settling back in, down towards that 100 par. Okay, the middle left one there, B&D, that's your most common bond fund, and it's the biggest, and it's largely because of the ticker. But it's an investment grade bond fund. So when you think investment grade, when bonds are graded from AAA is the best, AA next best, A below that, then you have triple B. Then you draw the line. So you got 4 categories of investment grade, then you draw a line, and double B, single B, triple C, all of that stuff is now considered high yield or non-investment grade, or what they just call it in the market is junk bonds. They're not junk. Ford's down there right now, right? Because of so they're not junk. They have value. Ford's not going out of business, but they're considered junk when you hear junk bond terms. Well, B&D can't have any of that stuff. So a lot of what you saw was if you had individual bonds and like a Ford bond, and as soon as it drops to double B, B&D has to sell that. They cannot hold it. So that's why you were getting what's called the fallen angels, is the particular bonds that are investment grade that fell out of investment grade funds. So you could see a bond that's paying, you know, $100 par and all of a sudden be down at 60. Well, it's a buying opportunity. Before the COVID thing hit, GE was kind of down on the edge of bankruptcy for a while, and their bonds were selling for 80 cents on the dollar. I snapped up GE bonds there, and they've all, of course, come back. So you can make money with bond trading. It's rare that opportunities set up, are more rare than the equity markets. I don't spend a lot of time there, but it is a place to go at times. Okay, AGG. So in the middle there, those are your biggest investment grade bond funds is B&D, and then off to the right is AGG. That's aggressive, and that's all high yield. So with high yield, there's more risk, so the chart's going to move more, but over time, it pays off a higher dividend. So the B&D, I think, pays like 3%. AGG is going to pay up towards that 4.5%, almost 5%. So, and then the bottom two, SPTL is a treasury, another treasury fund. It's not as stable as the G-bill, which I like. So SPTL, I'll do that. That's kind of, to me, halfway between the XP and the G-bill. It's kind of cut the middle there, where G-bill yields 1.8%. Your SPTL is around 2.2%. So that can make a difference for somebody when I design their portfolio, especially if they have 100K sitting in, do I use G-bill and get the 1.8, or do I get the 2.2 with SPTL? So you can see it moves a little bit more. It's not quite as stable as the G-bill. So that's when I would use that particular fund. And then the last one is the high yield HYGV. So again, you can see that it's not quite as money that had flown into, had been put into this has not actually recovered back into this fund. So it's not a best of breed, if you will, like the AGG. So, all right, that's what I've got for bonds. Let's go ahead and take a look at the tabs and see what we have for some day trading stuff. Okay, let's see. Let's pull up the earnings, folks. First, let's look at Bank of America. They were negative and then flat for a while. So back to, they're down a little bit, closed at 24.60, down at 24. So not a whole lot of movement there. And then Morgan Stanley was the other big one, MS. Again, they beat earnings. They're gapping up, but not enough to really be worried about it. And then trying to think, somebody missed earnings pretty bad this morning, and then blanking on it. Maybe we'll come across it. Okay, looking over at the tab, we have NEO. That's been in play. It's had a ridiculous run up. I think it is due to come in, and it does meet our numbers. So let's pull the chart on NEO. And again, this would be a short. So it closed at 13.52 down to 12.35. If we have a red market today that opens and starts to drop, that's where, if I were taking this for real money, I might get in at the 3 or 4 minute point to see if, okay, the market is, yes, selling off, and NEO is one of those names that could sell off pretty hard with it because it's run up so much. You can see it was up at $14. What's that, a day ago? So pretty crazy there. All right, American down off of the 25,000 potential layoff. So it's already so low. I don't know if you'd really be, I don't know if it has the movement in it to go short, but we'll put it on our watch list. Norwegian below that, down 8.5% with volume, same sort of thing. Didn't really say, go ahead and click on that. I did not see a headline. I think that's pretty funny there. The Norwegian cruise line expects revenue for quarter ended June 30 to be insignificant. Okay, yeah, I could see how people would want to kind of sell their shares after a comment like that. That's kind of funny. Twitter, that's what I wanted to do. Twitter was gapping down. So let's take a break and look at TWTR short. They were down 6% last I looked. And again, this is Jack Dorsey, the CEO of Twitter, put out a tweet himself saying last night was not a good day, or was a good night for Twitter. Kind of a funny way to acknowledge the situation. So yeah, it had dropped, but it has largely recovered to where it's not really even gapping down all that much. But certainly a negative story for Twitter. Okay, GE is a name we talked about, but it's not moving enough. There's Bank of America down 3% now. Not huge. I don't know what Lynette company is. Let's click on that. Again, I like these that are priced around the single digit stock, dollar range, because they're easy to get in on. So it closed at 514. It's up at 635 right now. Levothyroxine appears to be so must be a biotech of some sort, and that was my drug. That's my guess. Just throwing a dart here a little bit, but Lynette could be on the move higher, so we will keep that on our list of longs. Okay, and let's go to the next tab. Dell gapping up 10%. Let's check that out. Local name for me anyway. Oh, they're spinning off VMware. That's that is good news for them. So Dell long would be an option. Pull up BMW. See how it's reacting to this exact same headline. So there's VMware. It is also gapping up a little bit, just a few percent. So, all right, and I'm looking at the gappers. Let's check out AA, which is Alcoa. They beat earnings. They were up about 5% earlier, so 1269 up to 13.1. That's a big industrial name we talked about earlier in the week. Smaller than expected loss, so again, they're losing money, so that would be something you could look at long. I'm not all that interested. It's too big and too industrial for me. All right, back to our tab. Netflix on the move, volume. Not really that interesting. BioNTech, that's the German name that was on the Operation Warp Speed, I think it was, earlier in the week. Penske Automotive Group, that's low volume. All right, let's look short. Should be some names to get in on short today. Tesla down 4%. Tesla short. I'll take a look at that. Again, I get immediate like nightmares when I think of shorting Tesla, even though it is a short. Let's see, nothing else really has either the volume or the move down. I'm kind of surprised about that. All right, let's take a look at the next tab. Looking for something that meets our criteria there. Nothing really meets that full 100,000 and then 5 to 10%. I don't know what K12 is. Let's check it out. LRN. Okay, nothing in the news. It's gapping up. Don't know what would be causing that. Maybe they're online. I don't know what sort of learning they do, but obviously that's a school-related stock of some sort. There's the Alcoa down there. Don't really like any of those long. Let's go ahead and take a look at the last tab. Yeah, Dynavax, that's been in play. Go ahead and click on that. Let's take a look. What's that? Universal flu vaccine. Well, that's kind of interesting. All right, we'll keep an eye on DVAX. Again, that's been a name that has been in play for a while. All right, let's set up our big board there. Ooh, FireEye on the move higher. It's a good name, cybersecurity name I'm in. All right, we will set it up right now. Let's put AAL short is one I'm taking a look at. Let's go Dell long, DELL, and Tesla short in the other screen, TSLA. All right, we got VMW from Burner. Let's put VMW in, put it where, oh, you've already got it up there. I like it. So VMW is up there in the left-hand screen. In at the open, out at $7 stop. All right, that looks pretty good. Sometimes over 100, I would consider $2 stop, but I'm not saying that that you need it there. It's not all that. It's not all on the move. So I think that decent looks decent there. All right, to short American or to short Dell. Our Dell would be long. Now let's go ahead and put instead of Dell, let's put Tesla up there. TSLA. $14.75 up to $14.90. That'd be a $15 stop. So it'd have to be moved down to $14.40. Or do I take American down? I'm going to short Tesla, which I'm 0 for life on this attempt in with real dollars. Maybe I'll do better with fake dollars. Tesla short. $15 stop. You can see where I got that off the chart. So it needs to move 45 to the downside. In at 2, out at 5. We'll give it 10. We'll go 5. We'll go 8. How about that? Can't make a decision this morning. All right, 5 seconds to go, and boom, there's my trade, Tesla short. All right. Will this be the one time? Yes, sir. All right, let's mark my trade. I like that. So, yep, let's go ahead and give me that at the open there. And 1479, drawn 79 minus 45, 34. So kind of off the bottom of the chart there. All right, you can throw it down there if you want. It's up to you. But we'll see. See what we have. In the stop is 1479 plus 15 would be 94. All right, close enough. We'll zoom in if we need to on that. All right, let's look at the burners trade. It was in VMW at the open. So it looks like 141 even there at the open for burner. No predator this morning. He had a meeting. And a $1 stop takes him down to 140. Again, we always get that lower stop in, and then that's pretty easy math for us to do. 142, 143. Well, let's look at Tesla. Yeah, this has been my experience, kids. So come on, do it. Just get through it. Put me out of my misery. Well, hold on there, bro. I don't know. We'd have to get into that a little bit. Come on, kill it. All right. Well, we'll see. We'll see. It probably did knock me out of there, but we will have to get in there. AL would not have worked. That's backing up, so I'm kind of glad I didn't do that. And see, BMW is not working as well. What's the market doing here? About even overall, so we shall see. All right, we're cutting the Tesla move into the pennies here. We'll see how that works out. All right, some other names we can look at. We can use that middle pane. Let's pull up BAC. I'll talk about that for a second. Again, this was long off of earnings, and it had gapped down due to that 4 billion that was out. So it's selling off, which I don't like because I have BAC. So that's not good. That would not have worked long. Let's look at NEO short in the middle there. All right, it's down 7%, but it's not dropping anymore. So don't know if that would have worked. It's kind of set up to drop though. So again, to take that short, you'd probably, well, the market's starting to sell off a little bit over on the left there. So you'd need that to go back down to below about 1254 to be able to short it. So it does not look like NEO is going to do that. It's screaming higher, so we'll kill that. AL we know about. Twitter. Oh, look at me. Did I say in it too? I did say in it too. All right, so pardon my Tesla. I thought I was in at the open. So, good job erasing that. So you can kind of catch me up. Let's see, in at the 2 points. So, yep, 1488.29. Yep, somewhere in there. All right, that's actually my trade. And then the $15 above that is up to 1503 is the upper stop there. So can't follow my own trade, but I'm sure Tesla will go up there and smack 1503 within a few seconds, right? So in at 2, out at 18. I meant 8, but I took 18. All right, well, keep an eye on that. Hot mess this morning. VMW is working, so let's see if that made 3R. It did. So if you're in VMW with real money this morning, it went straight up to 144.32. So you'd have been out of that trade with a positive 3R. So a nice trade there. That would have worked. We'll see. Let's see. Burners out at 7. So that's looking to be pretty good. All right, NEO screaming higher. I don't need to look at that anymore. Let's check Luckin. Not necessarily related, just more curious than anything on how my project. So it is exactly even. Well, it's down 2 cents on the day, but it dove down below $3 and then right back up to 313. So not a bad move there. All right, and let's check Blink while we're at it. BLNK selling off. not good. You can see the market on the left is selling off. We can zoom in on the SPY on the left there, kind of get a feel for those stripes down. Okay. All right, let's take a look at Twitter, TWTR. So nobody cares about the hack. It's going back higher. All right, and then LCI long. This was the flu vaccinations, or the flu something story. So up 20%, but certainly it's kind of stabilized there. All right, Dell would be a long. That's the other end of the BMW trade. They get a little better side out of it. So in at the open would have been 58 with probably a 75-cent or a dollar. So almost a 3R trade. 3R definitely if you go 75% stop, which you could have. So pretty good trade there. Probably 2 to 3R, if you will. So we'll see if Tesla holds my upper limit there. All right, BMW we talked about. Alcoa AA, let's check that out in the middle pane. Alcoa moving up nicely. Yeah, pretty much any trade you take out of Alcoa long there would have hit. So that's working pretty well. Tesla, and the last one we'll take a look at is DVAX long. DVAX was the universal influenza. That was the one, not LCI. So there's Tesla knocking me out of my trade. So whether it puts me out of the misery immediately or it waits a few minutes to put me out of my misery, I get the same experience out of it. So draw that big fat X and then put any other ticker in that chart because I don't want to look at it. No, let's go Shell, SHLL. Another EV name out there getting some love, and check NKLA. Nikola. All right, hanging out in the mid-50s. All right, back to the VMware trade. Let's see, burner is out at 7, so this looks like a nice clear winner once this, barring something crazy going on in the market. So we have 30 seconds before that closes out, then we'll take a look at the long names. If you can go the big board over here for the main layout. We'll kind of glance at that while we wait for our 30 seconds. Boeing down 2.5%. The Tesla down 2.5%. Not a whole lot up. FireEye's up, but not as much as it was. So Dow's down 0.5%. Both the Nasdaq's down 1%. S&P's down 0.2%. All right, the burner is out of the trade at 143.34, so that's what, a 2.4-hour trade. Very nice, sir. You get a free month in the room. We will add it to your tab, and we can leave the day trading stuff behind and go over to charts to see what we have on the big board. So not a lot in the green. Again, when I first click at this, I'm hoping to find I want the whole left-hand side to be in the green. It's not. Not a big move up on any of those. SPTL that we talked about this morning up 0.5%. So you can kind of see the relationship between SPTL and GBill. So on a down day in the market, you would expect SPTL to move up and GBill to move up. GBill is basically flat. Maybe it's moved a penny, where SPTL's actually moved 0.5%. So that's where you can get a little difference in the volatility there of the two. Let's go to the red side. See if there's anything. 16% for RVVTF, which is one of the psychedelic names. Luckin putting up a -7% right now. It tends to be on the move for sure. NEO, Delta Airlines, 10 Cent Holdings. 10 Cent Holdings is, if that would drop about 20%, I would start loading up on that again. Bank of America down almost 4%. BLNK, Workhorse, a lot of names I like here, down 4% or so. So we'll take a look. The big news out of Texas yesterday was there was no announcement. It was kind of slipped out that not only we already knew the schools weren't going to open for 3 weeks, but now they're saying no school-related activities for 3 weeks. So that's a lot different because now all the sports and stuff that we're ginning up to go are probably not going to go. It's kind of nebulous guidance. So people are like, does that mean we can't? And so, more to follow on that. But at least the governor didn't go to the Capitol and make the big announcement that we're shutting down like California did. So, all right, let's go down to Wikipedia for Jeffrey Gundlach. Again, he's the bond king. So we'll get that shared out to you here. Double Line Capital is his firm. And again, he did the Total Return Bond Fund for a number of years. So let's Yale PhD in theoretical math before dropping out. Very smart individual, but he was literally, Mr. Gloom and Doom. You can see a little bit lower. He was fired from his Total Return Bond Fund in 2009. Whether that's fair or not, because that was obviously at the end of the big global financial recession. So he may have just been caught up in the crossfire of all that. I don't know. He does, but when he's on CNBC, he does say pretty funny stuff. He calls it like it is, which I think is why they love him. All right, we can continue down. Don't see anything of a note to talk about there. And all right, that's kind of about it for his name. So anyhow, he's on. We can go to CNBC and check out the headline, or check out the final numbers here before I let you go. But yeah, keep an eye out for him. Again, he's the bond king, always pushing bonds. Stocks are going to go down and crash, and the market's over and all that stuff. So it's kind of fun to listen to him. Okay, so final review here. Everything's down between 0.5% and 1%. Volatility is on the rise. So if the market starts to drop today, you could look at a vol VXX long if you're bored, but not something I'm going to touch. I'm going to look for some entry points on these stocks that are coming down. So with that, I'm going to let you guys go for the day. Good job, Burner, and we will catch you guys tomorrow.